Senor Ortiz.
What's going on, KT?
Hey, look, man, let's kick this thing off, man.
Let's do it, man.
What to do, KTTV? This is KT coming at you live on another episode of the Administrators Podcast. And I am here with my co-host,
JoJo, everybody.
Hey, look, man, usually I would have the Al horns on these boys, but I'm going to go let them slide tonight, man. We're going to get a little work done. Let's talk about this money. But first off, man, how you been doing, man?
Man, we just, trying to navigate through this volatile market, trying to get from here to there. Ooh, my goodness gracious, man. But I tell you what, though, I'm starting to lick my chops even more if I want to get. So,
I'm looking forward to, you are the RSI guy, man. So I'm kind of looking forward to where we at, kind of see what's happening, feel greed, because we know we can't always time the bottom. So that's why you start your little nibbles.
That's right.
And then when it's time, you kick it off, man. So what we're going to do today is just pay attention to the market, because we know that things are not moving randomly. It is reacting to the pressure. And so when we say pressure, we talk pressure from headlines, pressure from the oil, pressure from uncertainty. So tonight it's all about breaking it down, why it matters, and how we should be thinking as a trader. Because this environment right here, brother.
Oh, man.
Look, the only way that I found myself winning is the times when I take away my wisdom from my emotions. Because as we know today, that thing is ranging today. And a whole bunch of times I wanted to just jump in because I thought it was what it was going to be. I say, I think one time I did jump in and I anticipated. And so I ended up getting stopped out. But man, today it's all about talking about what happens when you stay disciplined, man. So I guess, basically, man, let's jump into it, man. So what you got for us, okay?
All right, man. So we're going to start off by taking a look at the overall market sentiment, and we're going to take a look at just where we're at as far as with this S&P 500 over here with this heat map. All right, so everybody can see the heat map. All right, so we are red in certain spots and we are green, but let's check out some of these red spots because we are tech focused society and in general. So our semiconductors took a hit today. You can see they were led by NVIDIA. We got Broadcom, MU, Micron, AMD, Intel. We got Texas Instruments, Qualcomm, all of them in the red today. Semiconductors taking that hit. Also, Apple was in the red. Some of our other semiconductor and technology areas over here as well. Microsoft down 0.61%. Microsoft has also been in the downtrend. But if you continue to look at our consumer defense stocks, healthcare seems to be doing okay. And our energy area has also been up. Now, what we noticed today is some of our energy oil stocks were a little bit down today. There's a little talk out there that there could be nearing some type of trying to get that straight open. And so people look out for that. I did think about today, and I know KT and I talked about this earlier, that it might be time to start thinking about getting some puts on these oil stocks. And so in a little bit, we'll take a look at one of my favorites, Google, because we're going to be looking at that RSI and some of these other tech giants. But this is overall in general. Now, today was a little bit more green than it has been, in particular last week, but still our tech is getting slaughtered. AI is still a focus as far as what it can and can't do. But again, everybody's worried about that inflation because of those oil prices. Anything here you want to talk about, KT?
No, man, for me, it's just looking at the beat down of the semiconductors. I did start averaging or DCA into SMH. So I'm kind of starting SMH position right now. On started a little nibble. But I feel like just gonna ride this out, man, because they are beat down, but we know that these chips are the future.
That's right. And so, along with that, we've got now we think about what we are looking at when it comes to uh, our fear and greed. We are at a 9, y'all. We are at a 9 fear.
Man.
Y'all, we are at extreme fear. Just remember, when there's blood in the streets, that's right. So when others are greedy, you got to be fearful. When others are fearful, you got to be greedy. All right. So we are at extreme fear. 9. We have been getting whooped by everything going on out there when it comes to Donald Trump's his war, his talking. Are they really talking? Are they not talking? Is there any end in sight to the war? What is expected of that? And so, as we've always said, you got to start thinking about those positions that you want to get into. And there's a lot of heavy hitters out there that have been getting beat down. And so just because the stock market's in a downtrend, those stocks are going down right now, just like they won't always go up, they won't always go down. So you got to start thinking about what it is what play you want to make. Technology is going to be here for a while. So are your other places like Starbucks with your coffee. You got all those utilities. You got some of those stocks. All that's going to be around. So you start thinking about what sector, financials, what do you want to get into? Because right now we are at extreme fear. We are at a 9. We're not too far from going down to that 0. So just think about how we were in this position before when it came down to COVID, when we had a little bit of the crash in 24. Just think about what opportunities are out there, because now, as you can see, our VIX is at a 30. And so we've always been talking about that VIX on this show. And, we've talking about what range you want to keep it in. And we have busted through 30. So now we are headed for something really, really major and crazy, or we can start to rebound soon. And it's all really driven by those oil prices, which is really driven by this war, because eventually we know that our tech and our AI, they're going to come around, and those stocks are going to do what they do, especially our semiconductors. And so right now, everybody's gauging this war and what will happen. KT?
So for me, man, I feel like it's not a full sell-off, but it's also not a full risk-off. And so the biggest thing I've been seeing, and everybody should be saying, choppy price action. Every day it's like chop beef out here. We got mid signals across sections like we talked about. Intraday reversals. I was looking today when we hit down to 629, I would jump back up to like 633. We got tech trying to bounce, energy is elevated, but the broader market is just stuck between direction and hesitation. So for me, I would just call this no more than a reaction market. But I do know from the research that I've been doing that once we start looking around 40 in our VIX, so right now we just hit 30, and so once we start looking between that 30 and that 40 piece, that's when it may be time to start nibbling. I feel like by the time we hit 40 on the VIX, we will be at our point of reversal. So not trying to call the bottom, but over history,
right,
it's that 35 to 40 VIX. Is usually what we look for before we start bringing this thing back up, man. So that'll be my piece, man. Just understanding that everything happens fast, but it's not always follow through. So that's why it's so important that you're watching for anything in relation to trading as far as options or stocks entries right now, or you must wait. And if you miss the entry, as I talked about this one, staying disciplined and say, I missed my entry. But you don't go chasing, because as soon as you chase, that's when you're gonna get your head pushed.
That's right.
Yes, sir. Okay, man. Other than that, I think I want to jump into some of these headlines. So for us, the biggest thing with the headlines is markets are really reacting to the geopolitical tension that's in the Middle East. So we got the U.S. and the region strikes. So escalating those concerns. And so now we just all about straight up from. And so if that closes, as we know, that's 20% of the world oil passing through that strait, which means oil spikes immediately, and you can see Chevron today hit about 214, man, about 214. So I know I was fighting with it. Dude, I bought in at 165. So that was just some shares. And so just riding the shares up already to 214. I'm so wishing I would have bought an option call, but I didn't want to test it because everything, once again, is so unpredictable. But Brent crude jumped significantly. Natural gas surged across global markets. And so the reason that matters is because energy is inflation. So you look, a lot of that talk is being looking at our CPEs, our CPIs, all of those pieces. So higher oil prices mean higher transportation costs, higher production costs, and potential consumer price pressure, which is what we have in at the pumps. You know, I ain't gonna lie to you, man. I put the truck up. It's been parked. Oof, man, that thing been parked at least about 3-4 days. I've been never did a slingshot, man, because I refuse to pay them high gas prices. But you layer that on top of already rising price data, and the Fed suddenly has a tougher job. And so markets are now expecting the Fed to hold the rates longer. So our information went down that rate cuts could be non-existent for a while. And we know that that's not bullish for growth. So then what do we see? We see risk off rotation where money moves into safety, right? And so if anybody has been looking, the U.S. dollar, golds, and treasuries have been going up. But what's been going down is our high growth stocks, our risk assets, and our speculative play. But here's the key. That it's not panic, it's not repricing, it's just markets adjusting to uncertainty. And when uncertainty rises, volatility rises. When volatility rises, what we say, opportunity shows up, but
That's
only
right.
if you have that structure. And so now that we understand that environment, I guess, man, let's get into a few charts, man. I want to jump into a little of this platform holding, man.
All right, let's do it, man. Let's
Yes,
take a
sir.
look at what we got over here. We are going to be looking at, probably have not mentioned this on one of our stock charting before, but we are looking at Google. And the reason why we're looking at Google is because I'm going to go ahead and zoom this out, because when in doubt, zoom out. And so we have taken a hit from our all-time high of 348. We have really, really, really just taken a beating. And so if you look on the overall 1-year chart, or the zoomed out version, you see that we are at a double bottom right up in here. And we are extremely oversold at an 18 RSI. Let me say that one more time, 18 RSI. You know that anything under 30 is completely, oversold. Anything above 70 is overbought. But we are here sitting at an 18. And so I look at this chart and I see that I currently I own some calls for January of 27. I got in a little bit early. And so now I'm looking to see what happens next. If we break this line, I probably will see a 265-ish in that area. If not, we could come down to 250. If you look at the overall chart on it, the 250 is the 200-day moving average. And so if we break that 273, we have a good opportunity to get to that 250. And if we do that, it is going to be time to, just buy what you can, if you can, with this Google, because Google is going to bounce back because they are one of the leaders in a lot of categories. And so the other stock that we've looked at before is NVIDIA. And I want everyone to see that this NVIDIA chart, if it shows up. All right, what's going on with my computer? All right. All right, so it seems to be a little frozen over here.
Hey.
Not sure what happened, but if everybody goes, if we think about what I just said about Google, that 18 RSI has me thinking that we are going to continue. If we can strike back from this double bottom, that'll be great. If not, we're going to be looking at, trying to hit that 250 area, and that could signal an even bigger opportunity for us to be buying. And so just keep a look at. So since my computer froze up a little bit, I'm just going to go ahead and say that I'm looking at Google, NVIDIA, Palantir is reaching oversold area as well. Microsoft had a little bit of a bounce today, but they are extremely also in the downtrend. And so those are the names that I'm looking at. And then I'm going to throw one out there, KT. Throw one out there. I'm talking about Rocket Labs.
Come on, man.
Now around 58 RKLB. So I'm looking at getting into that because NASA, we got to continue that space exploration. So, all right, everybody, Google #1 on our minds as far as what we are looking to get.
Now, have you already started a position, or what's going on with that?
Yeah, with Google, I opened up a position for January 27. We're looking at a 450 call right now.
Yeah. Okay.
So I'm gonna add to that on any opportunity I get with this Google.
Yes, sir. All right, man. For me, I guess I'm jumping into a little bit of this platform program on my side, and I wanted to break down this ASML today. We know ASML. They have a lot to do with the semiconductor groups, and so a lot of people put in their orders. ASML does the fulfilling for NVIDIA, for a few more companies. And so I remember last year ASML had went all the way down to $700. If you look now, today I jumped in a little bit, and I bought one position. It was $1,200 for one share. So just looking at what's going on, but we know as our world grows, semiconductors will take off. So let's look at this chart. So the first thing I want to kind of look at is having us look to the left side of the chart, and what we see, the price was trending up. So you can see coming down right here, we were at 1060. Then we had a little consolidation, and then the next thing you know, here we are at 1568. So go up, price trending right above the EMAs. So we see everything is going up all above EMAs. Then what happened? We got that sharp rejection. So after that rejection, everything changes. Then we start to have lower highs forming. Then the price starts to drop below. Wait a minute. So price starts to drop below our moving averages. So we can see coming over here, probably in our 1300s, everything drops. And then momentum begins to flip bearish, especially when we drop under our 200 EMA. Now, as we look at the middle of our chart, right over here, we can see that this is a lot of choppy distribution. So knowing that this is where a lot of our traders get trapped, and let me kind of open it up a little bit so I can see here. I'm gonna get out this 4 hour, and I'm gonna go 1 hour here. Now I'm gonna go back. Okay, let's go back to the 4 hour, man. So this is distribution. Institutions were loading up while retail traders were trying to guess the direction. And the key clue that price cannot reclaim this orange.
Man, it'll be Saturday for us pretty soon.
So what we have right here is Thursday. So we got going up. We got some kind of pull these up.
I know this summer is right around the corner.
Start looking at our bottom right here, where nothing is coming back above our green. Above our orange. And so what happens when we cannot get it back above our orange? We start to reject right here with 1370. And then next thing you know, after we reject, we come under our 200. On this right side, this is where we get our lower high rejection at the moving average, which is our 200 right here. See this little candle.
I like having
and then a strong push downward. And so that's the continuation our trend, and you would think that once we get right here, this is where we were looking at for reversal, because it already tapped one time, it already tapped 2 times, 3 times. But what happened now? It's over, baby. And so now we're coming down. The only thing we got a little hope right now is at 1231. And I know we came over 1231. We came down right here on March 26th, capped at 1231, and we're coming down to 1231 one more time to get ready to see what happens. So for our key levels, here's what matters on this chart. The orange moving average, which is our trend control line. So right here, every time price is pushing into that level, we can see that what's happening? Rejection. That's what selling the step in. So the recent low price, where it's currently sitting, if that breaks clean, we are going continuation lower. So what I'm going to do right here, I'm going to put my phone for notification. I just set an alert at 1231. If we break that 1231, so
oh my gosh.
Yeah, that's it. So what I do when we're doing when I'm trying to get my levels, what I'll do, y'all, is I'll put in, I go to my line chart, and so everywhere that I see a line or a fold, I'm gonna make me a level. So we got here, we say 1183. We'll go back up here, we say 1258. So it's just showing you. It's just showing you that we don't have too much hope after we break this line. So after we break this line, we'll come back down. Looks like we got a full gap, and we're coming. Oh man, we almost back down. 9 now. So just looking at it, we break this. We ain't got a lot of help. We got 1231. We're coming back to 1183. But if we break that 1183 level, oh man, it's about to get rough, and we're gonna come on back down. Man. We're gonna feel that 1068. And what happened to that 1068? Yeah, we're gonna just stop right there, man. Now we did have a little pressure here around about 1144. So you can see we might have something after here, but if it breaks under here, it's a wrap, man. So what this means, this is not a reversal chart. It's a bear structure with pullbacks, and that is an important distinction because a lot of traders see these green candles. Whenever we make some few green candles, they say, "Oh man, this thing's coming back. This thing is about to recover." And I agree, you could think that. Well, in a bear market, what do green candles mean? They simply mean an opportunity for sellers, right? Because we know that all we wait on is one simple rejection, and we going down. So, all my people, if you're a trader, you're not chasing bottom, you're waiting for pullbacks into resistance. Then we're looking for our rejection wicks, our weak closings, continuation entry. And so I just showed you 1231, we may get a small bounce, but we may push back up to our blue, and after that, coming right back down if the market sentiment is still bearish. So first, I would think that's it, man. I think we're gonna have to keep us going.
Man, that's good right there.
Yes, sir. And so, man, I think it's on you, Jose. What you got for us, man?
Well, I just think that we got to continue to be on the lookout for any signs of a continual flush or an eventual bounce in this market. Remember, keep looking at the conditions when it comes to the news, the war, the oil prices, gas. Just make sure that you are looking and staying vigilant for it, because the bounce eventually, if the war ended tomorrow, are you going to be ready? And so I think that eventually we bounce with or without the war being over, because I just think that the market is overdue. We've been we're down almost 20% from that high. So I think that we are approaching a reversal soon. But just keep an eye on that VIX, y'all.
Yeah. All right. So for me, if you ready to close this thing out, I would just say, here's what I want everybody to take from the Saturday. We are the market with my headline,
And I'll teach third and fourth grade in overhand. So
that means
they love that.
It's an environment.
We never play a game.
Yeah.
So like we
wait for your confirmation.
playing like
clean your backyard and align with
clean
the
the
structure.
court, you know.
That's
Right
right.
But I
now,
have a
the
volleyball
traders who
net set up.
win are not
So
the
like
fastest.
round one,
They're the most patient.
oh man, we
That's
have
what we say
we use the
about
volleyball trainers.
market
Man,
is
I got a whole cart.
change.
No,
wealth
the
from
yellow,
patient,
the blue and yellow.
So
Yeah, I
if
got
you get value
tons of
from
those.
this, make sure you
And
tap
so,
in with us. Like
you know,
Friday,
first round,
share.
Oh, yeah.
Other indicators we're trying to level up financially. And our next episode, we'll dive deep into learning plays and how to position yourself before and after the move. So, Jose, close this thing out. Anything you got?
No, man. I think we hit the nail on the head, man. Just everybody's got to be patient one way or the other.
Hey,
Patience.
that's it, man. I think that's good for the administrators, man. KT with my co-host.
JoJo, baby.
And we will check y'all next week.
Tuesday, Thursday, game.